Welcome back to Delta Code. I'm Delta, seasoned economist with 20 years of investment experience. Today, I will be covering companies reporting their earnings. There's a lot of volatility on the day or in the week when companies report their earnings. This is important because they show their investors how well they did in the previous quarter, and they also guide how much money they will make in the following quarters and the rest of the year. Often, how much they say they will make in the future is even more important than how much they report they made in the past, because the past prices were somewhat priced in by the market from their previous guidance. Today, we'll be covering Datadog, Upstart, Lyft, and Twilio, and Match.com. We will also take a look at movements of Coinbase and a couple of changes I made to my crypto portfolio. Let's just jump into it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
If you're not familiar with the Earnings Whispers calendar, it shows exciting companies or most anticipated companies that are reporting each week. This week, the ones that I've circled are the ones that I care about and that interest me. These are usually high growth companies, and I'm a high growth investor. Yesterday, we covered Palantir, Lucid, and a few others. Today, we will talk about Datadog, Upstart, Lyft, Twilio, and Match.com. Match is not here on the list, but it is an important company and the one we've had in our portfolio for a long time. Tomorrow, Uber, Shopify, Robinhood, Airbnb, Trade Desk, Toyota, and ARM also deliver. Let's jump into it with Datadog. Datadog doesn't look like it moved, but it did. It fell 11.5%. You can see this plop right here. Why? Well, the company's first quarter revenue actually grew at 27% year over year to $611 million, beating the consensus estimates of 591, and the stock still fell. Why? Adjusted earnings per share were 44 cents. The estimates were 35 cents, and the stock still fell. Why? Well, it's all about expectations and guidance. As of March 2024, Datadog had 3,340 customers, annual run rate of 100,000 or more that are paying, which is an increase of 15%. This is great. You want to see adding high value customers. The gross margins expanded, their operating margins increased, and the cash they have also increased to $2.8 billion. Now, the outlook for second quarter is between 620, 624 versus consensus of 620, which is kind of in line. So why the market is really selling off, they might have expected much, much more. The stock is up 46% in the last 12 months, so maybe some profit taking. Next up, not a company we really care about very much, but since we covered Lucid and Tesla, I thought we'll touch on Nikola, Tesla. This is a truck EV car company, just a terrible company, in my opinion. I think their CEO went to jail. There was a lot of lying. I don't even know what's going on with this company. It reported sales of 7 million. Expectations were 10. These are such small numbers. Why does this company even exist? Adjusted loss of 9 cents, better than 22 cents that was expected. They produced a whole 43 trucks. It's not a lot of trucks. Anyways, Nikola seems to be nosediving. Let's see. 5-year. During the hype, it was $63. Now it's less than 60 cents. Sucks to have bought here. Sorry if you did. Don't do it again. Upstart. This is a company that I've covered in my possible short squeeze candidates that will do well once interest rates actually go down. Interest rates have not gone down. They've actually gone up slightly. So we will keep an eye on this company. It went down 12% after they reported, on top of the 5% during the day. So it went down quite a bit. Why? Revenue was 128 million, increase of 24%. That's great. But down 9% sequentially. The fee revenue was 138 million, an increase of 18 year over year. They had 119,000 loans totaling $1.1 billion, which is all good. They still had a net loss, and earnings per share were negative. Revenue, approximately 125 million for the second quarter. All the guidance, pretty much what they just delivered. And for the full year, they expect revenue to be about 300 million for the second half of the year. So basically, pretty much in line with small growth, but positive EBITDA in the fourth quarter. Maybe reduction in interest rate is being priced in here, that it will happen at least once this year, and that will impact following quarters. We will keep an eye on this one, especially because of this. Wow, 34%. I don't know if this is one that had 40%. I'll have to check back on my notes, but this is pretty high short interest, and after today might go up even more. So we will keep an eye on this. This is very interesting in terms of this company possibly turning profitable if interest rates go down, and then a short squeeze on top of that. That can be good volatility. Next up, Lyft, up 6.2% after reporting. Revenue of 1.28 billion, beating the estimate of 1.7. That's great. Revenue growing. I don't know what investors are thinking with the possible threat from Tesla Robotaxi, but doesn't seem to be phased. Twilio. We had Twilio in our portfolio. We sold everything. We bought some long-dated options. We think that it's a good way to play this company with the leverage. They reported earnings. Company slipped. Adjusted earnings were 80 cents, which topped estimates of 60. Revenue was 1.01 billion, slightly better than expected. So here's another example of a company beating expectations, but the outlook is disappointing. They forecast 1.05 to 1.6, and the estimates were 1.08. So very small difference in expectations and their guidance. They can easily beat these estimates. So is it warranted for the company to sell off 6.6%? The market priced in something different. Yes, it is. We will look at this one tomorrow and possibly add more options, because this is a good company. We think them beating estimates is not bad news. Last one here that reported earnings today is Match Group. This is the dating apps, your Tinders, your Plenty of Fish. It fell down 6% on top of the 2% it fell intraday. What happened? They also have Hinge, Tinder, OkCupid, Plenty of Fish. Weaker discretionary spending by user uncertainty. Stock dropped 14%, and Bumble, its rival, fell 30%, even though they're citing Bumble's app as being stiff competition, but the competition is not doing great either, so that doesn't make any sense. Tinder downloads fell 6%. Hinge downloads rose 18%. Monthly active users dropped 21% globally. That's not good. The company's payers declined 6% to about 15 million paying users. So, you can do the app for free, but if you pay, you get to actually use it. Expect revenue in the range of 850 to 860 million for the second quarter. Analysts expected 882 million. So that's why possible sell-off. First quarter revenue grew 9%, beating the estimates. So again, they beat the estimates, but guidance was weak. Similar to what happened to Coinbase this past week, they crushed the earnings by 60 to 70% better than estimates, and the stock is down slightly. We still have options that expire in 10 days. Hopefully, there will be a correction to the upside, and those won't expire worthless, because we're planning to use the possible profits to buy a Tesla. Or we're just going to be down $8,000. Sucks to be me. I did not expect this sort of reaction, but This is often the reason because of crypto prices being down. Market cap was up and now it's down. So see this little pullback here. Yeah, so since March, we've actually pulled back a little bit. And this may be a reflection of what the market is looking at when it comes to Coinbase. But their business is still intact and the guidance was strong. So what did we do today? Today we sold some of our positions in our Coinbase account. We sold our ADA, Cardano. We sold API 3 and some Litecoin to buy more SUI. We bought SUI. About 110 is our average price for SUI. What is SUI? Where is SUI? SUI is in number 46 crypto. It is a alternative layer 1 that boasts fast transactions and settlement finality that's really quick, 297 transactions per second. Now, this is orders of magnitude better than ETH or Avalanche and Solana. Solana's market cap is, I think, 60, 70 billion. This is only 2, so it can take some market share from Solana and ETH possibly. Each cycle, the newest shiny crypto layer 1 narrative is a hot take. So this is a trade that could turn into an investment if there's crazy adoption with SUI. But for now, I'm using this as a short-term trade just for the next 6 to 12 months. That's short-term for me. To bet on an alternative layer 1 that has some adoption and a good narrative. That's the quick update for companies that reported earnings today. We will look at these tomorrow. Expect similar results from Uber, possibly greater revenue and more profit because they're a bigger leader in the field, and they do charge more for their rides. Shopify is an interesting one we've had for a long time. I'm curious to see what Toyota is going to say, given the EV market hype, especially with Tesla as competition. And then the ones after hours, Trade Desk is a great advertisement tech play. Airbnb, obviously post-COVID, people are traveling. They are growing, though their fees make no sense. I've stopped using Airbnb when I can just go to a hotel where you don't have to clean after yourself. Robinhood just got a Wells notice yesterday. They're being sued by the SEC for crypto, along with pretty much every company in crypto. If there's some resolution with any of the cases that are fighting the SEC, then we can also see an uptick in Coinbase stock. I don't make this content for free. I work for likes and subscribes. Where are they? So please give us a little thumbs up. It really helps the algorithm. Give it a subscribe if you appreciate the content and you want to stay informed on the latest stock and crypto news and what I do with my portfolios. Thank you for tuning in. May the power of compound interest be with you. Peace.